Hey guys, are you able to see me and hear me? If anyone is there, just let me know so that I get to understand that it's working because today is the first time I am to see me and hear me. If anyone is there, just let me know because this is the first time I'm using making. I'm doing a YouTube live that way. I'm not very sure how the process goes. So it's I'm testing the waters as it is said, right? So uh, just give me a minute to check few things at my end. Right. So mm, I'm not sure whether the chat is going to work on that. Hey, hi Kalyan. I'm able to see your chat. From right. Right. So I see Kalyan is there. Hi Kalyan, how are you doing? So I'm not sure how many more people are going to join because this is the first time, as I said, I'm doing it, and I'm not sure how it actually works. I'm just trying out. But I hope you are able to hear me loud and clear. Hi Shiva Kanna, good evening. So, guys, are you able to hear me loud and clear, and you are able to see me, right? So, I guess 14 odd people are there. Okay, some things are coming out. Okay, yeah. Hi, Muhammad Talha. Oh, hi, Jay. Right. So, okay, let me do one thing because there's so much of this thing coming up. So, uh, yeah. But I hope you guys are able to hear me, right, and see through me. So it's 9:01. So I'm supposed to start at 9, so I generally stick to times. But just pardon me for uh, me getting a bit hand-holding on this because that's very important. Hi, Mukesh. Right. So, sure, they're saying on answer. I want to be in the sun, so can you guide me what to do after 10? Okay, that's great. You're starting pretty young, Shaurya. So, what I suggest, Shaurya, there's a link. Just below my this thing, in YouTube, just if you go below, there's a link of Linktree. So click on that, and you'll see different links out there. So there's a WhatsApp link as well. So connect me over WhatsApp. So whenever, most probably this Sunday, I'll be conducting a webinar as to what this world of investment banking is all about and stuff like that, how to make a career. So we can discuss over there. I think that would be a good way, right? And for others also who is not connected to me, please go below. There's a link out there on of Linktree. Click on that. You can get access to my free investment banking program. You can connect me over LinkedIn, WhatsApp, and many other channels, right? So on Instagram and all. So you'll get to understand whenever I would be placing new things, right? Hi Dapyan, how are you? मुकेश कल मेरा इंटरव्यू आईसीआईसीआई बैंक में है तो कुछ उसके बारे में भी सो मुकेश कौन सा एरिया में you have your interview, which is it into retail that you have your interview, or which side of banking you have your interview in? Just let me know, then I may give some thoughts or ideas of mine on this, right? Okay, so basically, guys, I have connected with you today to discuss on something which I which is primarily something of use for guys who are working in startups and have to take certain decisions around, or maybe an analyst, maybe working in a venture capital or angel investing company or a private equity company, and they sometimes need to understand how the business is going to unfold, and how certain decisions are required to be taken uh, by the startups, and how they are thinking around on that, right? So that is the essence of which I am going to discuss today. Goodness and goes on, yeah, listen, thanks, Jay, thanks a lot. So guys, first of all, let me know, is the objective with which I'm discussing, is that clear to you? Just let me know on that, guys. Say a yes or no, whatever it is. If it's clear to you as to why what I'm going to show or teach in this webinar. Not a webinar, this is not a webinar per se, but this is live, right? So whether the concept or the aspect with which I am discussing this is clear, right? Okay, so I'll show you a spreadsheet in terms of how this computation is done. But before that, I would ideally like to give you certain concepts around that. So just allow me to share my screen so that I can explain you certain things. So guys, are you able to see the screen? Just let me know, guys. Are you able to see the screen? The white screen that I showed, are you able to just press A so that I understand you had been able to see, because I stopped it now. But are you able to see the, were you able to see the screen when I showed it? Just press A if you are able to see the screen out here. Yeah, yeah, okay. So guys, now what happens is, say whenever a startup is looking for funding, or say they are trying to plan on something as to how the things would unfold for them in terms of what should be the, so basically there are four things ideally they need to obviously think about. So basically they need to think in context of the type of customer they would be having for their startup, right? And when I say that they need to think on this, the startups needs to think on this. So the similar thought would be for an analyst who might be sitting across at the financial institution end, maybe as in a venture capital firm or a private equity firm. They would also require to get themselves clarified around these four things. What, like, so one is the type of customer, the second is the number of customers, right? This is the second one. The third is your so basically the revenue that they may possibly generate revenue from its customer, right? And the fourth is your percentage of uh, your market that they may capture. Okay, right? So these are the four elements which gets to be very, very significant, right? So one is the type of customers, the number of customers, the revenue from each customer, and the percent of market that they may capture. So I'll show you a spreadsheet to you, which will give you more understanding as to how to really work on this, because how much revenue the startup can possibly generate would be a function of all these elements, right? So it's very important for one to understand as to how the company, the startup, is actually proposing to go about for this, right? So just let me know, guys, is it clear till this point of time? Just give me a quick A in the chat box if it is clear, guys. Guys, please restrict your discussion only into the topic which I am discussing today. If you have anything to around the career of investment banking and all those stuff, if you want to discuss on that, there's a link below of Linktree. Click on that. You'll be connecting. You connect me over WhatsApp. You'll get to know when I conduct my webinar the next time. Most probably this Sunday I'll conduct that. So join over there. Then we can discuss over there, right? So I hope this section is clear, right? So now the fact that we understood that these are the four major elements around this. So now let me do one thing, and that is show you as to how this is analyzed in context of a Excel sheet, right? So as I mentioned over here, as you see, so there are four aspects which I mentioned. One is the type of customer, the second is the number of customers, the third is the revenue from each customer, and if you go below, the percentage of market you are able to tap. So these are the four broader heads. Now let me take you through and explain as to how the thing works, right? So suppose the type of customer that you get to see that the say the startup is having three types of customers, say A, B, and C. Okay, and now they sort of is projecting that they would be having for a certain period of time, they would be having say 10,000 of A customers, 15,000 of B customers, and 20,000 of C customers, right? And the possible revenue that they can possibly generate from each of them, say maybe 800 for the A customer, 600 for the B customer, and 900 for the C customers. Then what happens? The total revenue gets to be the number of customers into revenue from each customer. That is the amount that is coming up over here, right? 80 lakh, 90 lakhs, or 1 crore 80 lakhs, right? So something around this. So essentially this is the sort of total revenue that they are anticipating in context of each of the from each type of customers, I mean to say. And this 45,000 is a summation of the number of customers across different types, right? Now uh, suppose if you are trying to understand that how what proportion of the market this startup may possibly take up, and how the sort of revenue would differ in context of each this proportion of market that they take up, right? So over here, say 45,000 is the figure that we have taken from here, and now suppose they this percentage, as you see over here, is like 0.25%, 0.5%, right? So percentage of market you are able to tap. So that this is the sort of range of percentage of market that they are able to tap. So we start say with 0.25%, 0.5%, right till say 25% of the market, suppose they are able to tap, because there would be other competitors as well, right? Now suppose that this the I mean to say uh, you see for the A type of customers, they are looking for a revenue of 800. Okay, say 800, which is over here. But if we try to understand that, okay, if the revenue doesn't get to be 800, but say 75% of that figure of 800, that gets to be 600, or say on the other end it is 125% of 800, so there is a scope of increasing the pricing, right? So we take three ranges over here: 600, 800, and 1000. And in context of each of this, so let me first understand, is it clear till this point of time? Then it makes more sense for me to move ahead. Is it clear till this point of time, guys? Just give me a quick A in the chat box if you are getting till this point of time. Just give me a quick A so that I understand you are uh, I think it takes a bit of time to stream through. Just a second. Yeah, okay, thanks for your responses, guys. So now that we are understanding, okay, that there are, say, this three types of for say the A type of customer, we can have say three pricings, okay, 600, 800, and 1000. Similarly, it goes for B. So this is basically, this is for say sort of we merge it over here. Okay, so say it's A, right? This is for A. Okay, and so similarly over here, this is for B, and the and over here it's for C, right? So I'm not writing it down, but I hope you understand. So 600, and then 75% of 600, and 125% of 600, and this is 900, and 75% of 900 is 675, and 125% of 900 is 1125. So that's sort of a, we are trying to do a sensitivity analysis around that, right? Now, when suppose this say A, over here, if we go to the left, we get to see that G3 into G11. So if you follow the computation, it will be very easy for you to understand. So G3 is what? The total number of customers get to be 10,000, right? And G11 is what? Is 0.25%. So we are trying to understand that if 0.25% of the total number of customers that we are the uh, market is, right? So if we are getting to reach to that percentage, so that gets to be 25, right? So it goes like this. So 0.5% of 10,000 is 50, likewise, right? So over here, of the 25% of 10,000 would boil down to 2,500, right? So this is the sort of figure we are computing over here. And similarly for B also, so for 15,000 of 0.25%, so if you go over here, H3, sorry, so 15,000 into your G11, right? So 0.25% of 15,000, that is 37.5, and similarly 15,000 into 25%, which is the last one, is 3750, right? So similarly, you compute for A, B, and C. So that gives an understanding that, okay, if I'm able to reach to this section of the market, then how much it gets to be, right? And how many customers then we are possibly able to reach, right? Now once we are been able to identify the number of customers we are able to reach, then in context of each of this pricing, so suppose this if you go to the computation, so say over here, uh, this figure 25 into h10, right? So that is 600. So 25 into 6,000, that is 15,000, right? And over here it would be 800 into 25, because these all figures are in context of A, which I explained earlier, and 1,000 with 25, so 25,000. So you'll be able to, I'll be sharing this sheet, guys, so no worries. So you can go through the formula and get to understand. But my objective of conducting this live, I intend to conduct a lot of lives on for discussing a lot of things as to how real analysis is actually done in the market, right? So you guys need to get a flair of that. That is something which is very important for getting the best of jobs. And uh, wherever you are, whether you're into business or jobs, you need to really be aware of this set of things, right? So this is how the computation is done for all the three types of customers. And when we sum it up, so like if we come over here, the combined 75%, that is 75% sort of structure, this is a 100% structure, and this is a 125%. So this is like, if you go over here, it's 15,000 plus 16,875 plus 33,750, that boils down to 65,625. So this is how we get to understand that the revenue of the company in context of the pricing being 75%, and pricing being 100%, with a market where they are reaching only 0.25% of the total number of customers, they would be able to generate this much of revenue, right? So is it clear, guys, till this point of time? Just type B so that I understand that you are getting what I'm trying to share across over here. Just type B so that I understand that you are getting it and you are with me. Yeah, thanks, Ahmed. So I only received the input from Ahmed. The others are, guys, are you understanding, or I'm not being able to explain? Just let me know, guys. Yeah, you'll better understand and appreciate when you get hold of this Excel sheet. You'll understand how the computation goes. It's very simple. Just follow the formulas. You'll be able to understand. But I hope you are getting that this four important aspects which are there, right? That is the type of customer, the number of customers, the revenue from each customer, and the percentage of the market that they may take up, and in context of the varied pricing levels, how the revenue is going to shape up, right? And once you get that clear understanding as to how this revenue is going to shape up, then what happens is that you are able to take a proactive view in terms of how it's going to work. Right now the fun part comes up over here. Now why I say the fun part is because what happens is that you as an analyst, if you're thinking, okay, if I lend to this company should minimum have a turnover of this much amount. Say over here I presume that I need this company to have 50 lakh as the revenue, okay, minimum. So for that, how many customers this company need to reach to, what should be the composition of the type of customers, what should be the pricing, how much market they need to reach to. Now how do you get that? So once you select this section, then there is something which is called the conditional formatting, right? So as you see over here, uh, sorry, where it is gone. Okay, just give me a minute. Yeah, so you, if you go to conditional formatting, so once you highlight this entire section, right, and you just try to see that how what, so suppose if you are looking for revenues above 50 lakhs, so when I click over here and I give greater than, okay, of a certain amount, so say 50 lakh, and press ok. So I'm not putting the figure over here because it's already done, right? So I'm canceling it. So over here you see the ones that are shown in yellow are the ones where the revenue gets to be 50 lakhs. So you understand that, okay, if this at when if the company is able to penetrate 12% of the market with a pricing of 125% across different customers, then they would be able to get to a revenue of 52 lakh 50,000. So over here you'll get to understand that at what pricing level and what percentage of the market, if they are able to tap, they can reach to a revenue of 50 lakh. So what happens is that if someone is able to understand that, then the sort of a reverse computation gets to happen, right? So okay, if I can reach to this percentage of the market, so obviously one needs to decide, then all the strategic questions comes into play, that how I can reach that market. Second is how many customers I can possibly reach out, or whether I can really play around with the pricing to a certain level. So if I try to increase the pricing, will the customers be okay with the increased pricing, or I'll be having a sort of a negative effect in terms of the revenue, right? So all those strategic decisions that you need to take would be a function of how you sort of anticipate this structure, right? So this is sort of a first hand feeler when you are actually looking forward to take a sort of decision as to which markets you are intending to reach to, how many customers needs to be over there, what would be the pricing level, what may be the sort of uh, play around pricing, in within what range we can play around. So if we see that if the range is getting too high, then we can reduce it, right? So we have taken an example of 75%, so we can change it to say 90% on one side and 110% on the other side, right? So we are taking a sort of a range of 10% either side. So we need to actually play around with this, and once we play around with this, we get to understand as to how this sort of startup should actually be uh, taking the calls, right, initially. And obviously over a period of time, the more you get into the market and get more customer sort of feedbacks, the you obviously need to change on the plan, right? So that's there. But at the first level, when you are really looking forward to start the business, you need to have do some level of sensitivity analysis and sort of approximation as to how you should be taking this forward, right? So guys, just let me know if there is any question if you have understood, if this is something which you got some value out of, how can we find different types of customers for my products? So when I say, Ahmed, the different types of customers for your products, I mean to say that your products would be different, right? So when I say different types of customers for products, means the products would be different. Obviously, in the same products won't be so it may be either way, right? So it may be that different products have different customers, or you may have one product but there are different customers with different price ranges, right? So that may also be the case. So I'm not trying to make it very this can be further made complex, but I'm not getting into that. Just think over here that you have three different types of customers, right? Say if in the banking fraternity someone is a retail customer, another one is a small and medium enterprise, the third one is the corporates, right? So everywhere you find two three levels of customer. If it's a SaaS product, you will see someone who is buying customers who are say buying products of a certain configuration, someone which is a mid-level configuration, and someone with a higher level of configuration. So you have different segments of customer. That is what I'm trying to mean over here. Is it clear, guys? Did you learn something today? I want to make such lives where I give you such small nuggets so that you understand as to how simple analysis is done, because this is very important. Because if you are going for an interview and someone asks you, you should be able to answer. Format, how can we use data to estimate? Yeah, yeah. So basically, Ahmed, it is basically a means to understand how we can say take a fair judgment in terms of which market we should be going for. Can we reach out to that percentage of the market, or there is what price point we can play around to reach a certain level of revenue, right? Because everything at the end of the day starts with revenue and end with cash, the entire valuation game. So we discuss a lot around valuation, but valuation is something which comes at a later part, when there is actually some business happening, right? But I wanted to discuss something much more and much before that, right? So when actually the business is starting, how you can possibly take sort of a call as to what should be the ideal proportion of things. So basically, the optimal structure, that what should be the optimal structure, how many customers I need to be reaching out to, what type of customer, what price range I need to be playing around with, and sort of what's the market share I need to reach out to, so that I can have a bare first level of revenue that I intend to reach out to, right? And also, this is something you can, as you move forward, you can obviously make use for the further level of analysis as well, right? So investment banker doesn't need to estimate, but obviously they need to understand what this guy is trying to say, right? So investment banker should appreciate when this startup guy is trying to place across this thought to the investment banker that this is what my plan is, right? So the investment banker needs to make them understand, appreciate what this guy is trying to say. And in certain cases where an investment banker also do handholding to certain guys, that if that is where the investment banker is playing a part, that you are sort of budding with a startup to help them raise finance. So if that is a sort of a role that you are playing over there, then you may need to sort of give them a structure where they can place their sort of opportunity to the investors in the right context, right? So that is where I'm trying to bring this understanding from. Explain more about the startups which was discussed. Jay, I want to keep this sort of lives only limited to the discussion which I want to bring forward, right? Because otherwise it's going to be haywire, and I do not want to have this very long, because that's not the intent. So please, I'm sorry for this, but I won't get into that discussion, right? I want to restrict within a certain period of time. I want to pass on a concept, some sort of way of analyzing things, because that is what I'm trying to place across, right? So I hope you learned something, guys. So once this, if you are uh, if you would be interested to get access to this Excel sheet, I'll be placing a link once I close it, just below the YouTube video, right? And there you'll be able to get the access, so you can click on that and get access to this Excel sheet, right? So any other question, guys? Did you find it valuable? Just uh, or any thoughts of yours? If you have found it valuable, just give V in the chat box so that I understand that you found some value out of this. You like this and you'd like me to share such small nuggets of analysis, how it's done, because I think this is a very important but very a missing part, which is not been really shared across or placed across by many individuals. So just let me know, guys. So that, right, so I'm not getting any response. Are you guys there? Jay is saying, yeah, this information is very valuable. Thank you, Jay. Thanks a lot for letting me know that you liked it, right? And you'll appreciate more once I share the Excel sheet and you are able to see through the calculation. You'll be able to understand that. So going forward, my intention is to create. See, I can just make a sort of video and upload it also, but I think. If I'm doing some live sessions, it will give an opportunity for us to interact and you also to clarify on certain things on that concept on which I'm discussing, right? So guys, thanks a lot for joining, and I'll be sharing the link, so you can always refer back, come back, and join and take access to this sheet, right? So thanks a lot, guys. Bye. I hope you learned something today. We'll see you in the next live. Bye, guys.